feel good for Memorial Day this year.
Yeah, speaking of long weekend, everyone is about to go out shopping, maybe in bulk if they're having people over. I mean, ultimately, even past the holiday, even past the middle of the year, what worries you most, Stu, about the direction of the consumer, about the direction of the goods that you're taking in? Because realistically, everything around the tariffs is not over yet.
Well, I think the thing that worries me the most is, look, we definitely have on the forecast out there a little bit is prices going up. I mean, as Walmart indicated also. I worry about that. I'm trying so hard to keep prices down. You know, whether eggs are it's $3.99 or $7.99, whatever. There's conventional, pasture raised, all different ones. You know what? I don't want to go up over. You know, if they're $7.99, I don't want to go to $8.39. Sales go down. So you know, we're trying to monitor that right now at the store. Price increases keep me up at night, and also I'm splitting a lot of this with our vendors. I mean, it has an impact on our margins, which are already razor thin. So,
right,
keeping our prices down, but also handling all these price increases and keeping, you know, our margins, you know, solid. We have 3,000 people we have to take care of here.
Stu, great having you on, especially for locals. Stu Leonard's really is a treasure. I'll be at the Yonkers store for sure this weekend. Stu Leonard Jr.
Hey,
there.
Matt.
Yeah?
Tomorrow, if you're going to be at Yonkers at 2 o'clock, Walt Frazier and Earl of Pearl Monroe are going to be at Stu Leonard's in Yonkers at 2 o'clock.
I will check it out. Stu, thanks so much for joining us. From Stu Leonard's, this is Bloomberg. Advertising company Mountain and some of its shareholders have raised $187 million in an IPO priced at the top of its range. Shares of the company, which counts Ryan Reynolds as its chief creative officer, are set to begin trading today. So joining us now live from the floor of the New York Stock Exchange is the CEO of Mountain, friend of this show, Mark Douglas. Mark, great to have you on. Congratulations on the IPO. I've been asking you about this for 3 years, and normally you're not allowed to say anything about it. Now you could finally talk about it. How difficult was the road to this IPO with all of the market volatility thrown at you at the beginning of this year?
Yeah, it was. First off, thanks. I appreciate the congratulations. It wasn't easy. We filed our S1 on February 28th, and the market proceeded to, kind of crash a bit right following that. But the company's doing really well. We grew 47% year over year. When we published the S1 on February 28th, those numbers weren't published. So we finished the quarter, published the growth. Our goal is to provide consistent growth both for our customers as well as for the market. And so the window opened up in the last week and a half, and we jumped right in. We started the roadshow on Wednesday, and here we are today, the following Thursday.
Mark, talk to us more about conversations with investors. You brought in BlackRock, for example, but what about everybody else? What were they looking for from you as you took the company public?
Yeah, I mean, the number one question we got on the roadshow was size of the market, which is huge. I mean, we're talking about bringing performance marketing to small and mid-sized businesses, e-commerce companies, local brands, and there's over 1 million of those in the U.S. that we think could easily be on our platform. So there's this really big market, and then we got to ask a lot about competitive moat, and we're approaching half the company is engineering. So you combine those two. This huge focus on engineering, big total available market, lots of growth, adjusted EBITDA last year, $39 million and growing, and investors responded. I think we were something like 14 times oversubscribed for the IPO. So we were very pleased with the response we got.
Mark, I saw somewhere on social media, I saw Ryan Reynolds doing a little spot for the IPO as well, saying, like, I got involved in this company and you can too, at the IPO. People are always asking what he actually does for Mountain. Tell us about his role.
Yeah, I mean, you can think of it as 2 or 3 roles. So first and foremost, think of Mountain, think of Ryan and George Dewey as co-creator and another 5 people. They are essentially Mountain's kind of brand team. They contribute hugely to the brand. The phrase, the hardest working software in television, which is what we want to do for our customers. I mean, that's right out of Ryan and George and that team. How we position those things. We have a huge also performance marketing team that they contribute in terms of making small and mid-sized customers. Ryan is also, I mean, he does sales calls. He's always available. I mean, he has an incredible work ethic, and he really, really just knows how to resonate with consumers. So it's been an incredible partnership working with him.
So speaking of Ryan Reynolds, my understanding is that his creative agency was transferred over to its original owner, so not in this public company listing, but you have a new contract with Maximum Effort, that creative agency, to keep up the relationship. What does that look like, and what kind of value do they add to you?
Yeah, so the form of the, can think of as the legal form of the relationship change. They are focused entirely on creativity, so it didn't make a ton of sense to have like some of the world's most creative people also now be subject to SEC filings and stuff like that. So the form of the partnership changed, but how we work together has not changed at all. I mean, that team is here with me right now, here on the floor, and like you cannot tell within the company that anything has changed, and that's the way everyone wanted it to be. So it's been absolutely incredible. And the original owner, by the way, is Ryan. There's no other parties involved. We have an incredible partnership between, Mountain, me, him, Maximum Effort, and we continue to plan. That's going to continue. It's been working incredibly well.
Mark, you are, we go to you all the time for what's happening in Silicon Valley, what's going on in social media, what's happening in connected advertising. And you're on the West Coast normally, but you grew up here, right? Across the street from Yankee Stadium. The Yankees are first place in the AL. The Knicks, although they had a really tough loss last night, are outperforming everybody's expectation. How psyched are you about New York sports right now?
Well, I'm hesitant to make a comment on the Yankees because I was kind of a Mets fan growing up. Don't hate me for saying that. I couldn't afford to get a Yankees game back then, so the Mets were so bad you could pretty much just walk in. But anyway, I was just going to sound like a cliche. I love New York. I truly do. I grew up here, grew up every street in New York. I came to New York Stock Exchange as a kid when there was no security and you could just walk back in and be here. Now it's been incredible, and I support the Yankees and definitely the Knicks. I've seen a lot of good games. Knicks Piston, man, that's a throwback. That's that's like history repeating itself.
Well, that's kind of what I was leading up to, Mark. I mean, the New York Stock Exchange has such a rich history. We take it for granted because this is financial news, but what does it mean to you, a kid who grew up in New York City, to be listing his company on the New York Stock Exchange? Yeah,
I mean, this place was literally part of my playground. I was here, Central Park, Rockefeller Center, and it made me who I am. And then to come here and now list a company on the New York Stock Exchange and talk to the president of the New York Stock Exchange and all the companies that preceded me, more than 100 years of history. Honestly, and let me add, and have people here that I truly love. It's an amazing experience. It's an amazing time. I'm very happy to do it.
Mark, thank you so much for joining us. Don't even want to talk about the Knicks today, but we will save that for another time. That is Mountain CEO Mark Douglas. Let's get a check on these markets, shall we? Because we are watching a turnaround story start to fall apart. We are looking at an S&P 500 now about flat on the morning, Matt. We were looking at gains of almost 0.2%. The Nasdaq 100, though, still holding up, almost 0.5% higher, and that 10-year hovering around 4.6%. That tax bill, of course, making its way through the House and on to the Senate. Looking forward to watching that bond market next week as we watch those talks play out.
Yeah, I mean, we're still up 17.2% from the April lows, but it does look like a turnaround kind of falling apart. I hope that's not a jinx on the Knicks. When I walked in this morning at 3 o'clock, one of the security guards was actually crying. He was literally tears falling from his face because they were up like 13 points with a few minutes to go, and then lost in overtime.
Catatonic was the New York Times words for the stadium yesterday. So just absolutely brutal. But
it's only game one.
It's only game one.
And let's talk a little bit more about stocks then, away from basketball. Bloomberg cross-asset reporter Isabel Lee is here on set with us. I'm not sure if she cares about basketball, but we're starting to see the market slide back. What are you looking at, individual stocks?
Under the hood, we're seeing some green. So Snowflake is higher by around 10%. That's the highest since February 2024. So they gave a strong outlook for quarterly sales after launching a slew of products over the past year. So product revenue, which makes a bulk of the company's business, will increase about 25%. So that's higher than analyst estimates. The company also raised its full-year forecast for product revenue. So Evercore said that bump, coming despite an uncertain economic environment, illustrates management's confidence in the durability of demand. So Snowflake makes software to really ingest and analyze data from a variety of sources. That's as much as I can explain simplistically. And I don't care about basketball.
Do you care about clothes, though? Because a stock that I'm going to, you know what?
She won't talk about shoes with us.
I'm so disappointed. I'm going to change your mind about this. But in the meantime, clothes, Urban Outfitters at its highest levels ever.
Highest levels, yes. It's jumped as much as 24%. Now it pared back some of those gains, but still it popped 20%. So the company reported net sales that beat average estimates. So Urban Outfitters has a portfolio of companies, including Urban Outfitters, Anthropologie. They have nice mugs and nice clothes, Free People, FP Movement, and etc. So analysts note that the strength of Urban Outfitters, the namesake brand, is positive and that the retail's margin expansion is looking good. So JP Morgan said for the first time in 3 years, first quarter same-store sales grew, and Bloomberg Intelligence said that this firm could lift its forecast for operating margin for the rest of the year with minimal effects from tariffs. So really, lots of good good positive reviews, but there's an Urban Outfitters near my home, and most of the time when I walk past by it, it doesn't really have a lot of people. But
It's
I guess,
empty, right?
What?
They seem empty.
People
Whenever I
buy
see
things
them,
online.
But maybe just mine, and maybe people order online too.
Also, maybe it's the time that because I'm going at 1 o'clock in the afternoon. I was just looking at Bitcoin right now, 110,800. This is an all-time high. This is an all-time high.
Yes.
Shonali, is this an all-time high for
Sounds
Bitcoin?
like an all-time high to me.
So crypto stocks must be up.
Yes, crypto stocks are up, no surprise. Galaxy, Riot, Maris, and Marathon. So all of them are really just riding on the sentiment of crypto. There's a wave of optimism. We have this key advancement in the key stablecoin bill. We have MicroStrategy, or Strategy, just now. Just keep on buying stuff. And really, we have just
MicroStrategy changed its name to simply Strategy.
It's
simple and
future,
cool.
I suppose.
And yet they don't have a strategy, right? It's just
Let's
they
buy
own Bitcoin.
Bitcoin.
Maybe they have, we just don't know it.
Right. Fair enough.
And you had Mike Galaxy Novogratz here yesterday, and he also
Mike
commented
Galaxy.
on.
Can I tell you
call him as
something?
well.
Mike Novogratz, I gave him such a hard time years ago for when Bitcoin dumped off the train. But you know what? He's riding high, and he's finally listed. It took him years to get into U.S. listing, and Galaxy now is actually listed on U.S. exchanges as of last Friday.
Yeah.
And they're up 30% year to date, aka last Friday. But still.
Yeah, well, he's doing well in a number of different respects.
The Goldman of Bitcoin is what he wants to do. Let's see if he makes it there.
Isabel Lee, thank you so much for joining us. Isabel Lee from our Cross Asset team. By the way, Shonali, you're going to talk to
Arjun Sethi. It'll be a really interesting conversation. That is the co-CEO of Kraken next hour on Bloomberg Technology. He's also a VC investor, so has been in a lot of those high flyers. Think XAI, for example. And now you're going to see Apple, Tesla among the companies that will be tokenized for non-U.S. investors. Let's see if they bring it here to the United States. Coming up next, we're going to go back to normal way finance. Jamie Dimon backs the Fed. The JP Morgan CEO spoke exclusively to Bloomberg about the uncertain path ahead for the U.S. economy. We're going to bring you some of that conversation next. This is Open Interest. We're looking at a day of IPOs here, Hinge Health and Mountain, and Hinge in particular. You're looking at them indicated to open at $34 to $36 per share. That would be a pop. They IPO'd at $32 a share. Remember, it's been a choppy trade in the market this morning, but we have seen a lot of love for these new IPOs after a dearth of them. Now, switching back to the big story of the day, in the world's biggest bond market, investors have been pushing back against President Trump's tax cut plan. Bloomberg's Haslinda Amin spoke with JP Morgan CEO Jamie Dimon in an exclusive interview at the bank's Global China Summit in Shanghai.
You talk about that kind of complacency. I'm talking about the asset price in the United States, and it's a long list of things. It's QE, it's fiscal deficits, it's global fiscal deficits, it's potential the trade wars, it's these huge complex geopolitical situation, and I look at all of those probably not being properly priced into the marketplace. But we don't know what's going to happen. So, I saw last night's reaction. I don't worry about one-day move in bond markets. So.
You don't worry about one day, but when you take a look at yields, they are at higher levels than they were before Liberation Day. I mean, we talked about how 30's higher, and some are talking about 10's getting to 5's, 30's getting to 7%. How are you assessing that? I mean, how high do yields have to go before they reach breaking points?
Yeah. I don't know the answer to that. No, we assess, the way we run the company is we prepare for a full range of outcomes, regardless of what you think. I just think there's a chance that you'll have stagflation. So I'm not saying it's going to happen. I don't want the reader to say he's predicting that. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. And the infrastructure needs are inflationary. And now you have offsets. You have oil prices down there quite a bit, which is quite deflationary. But with all those things taking place, yeah, you may be surprised.
As we said, it is a higher yield environment, and you have said before that we could see some sort of rebellion in markets around the world. Is that still a possibility? How might that look like?
Yeah, so I would not call it a high yield environment. I mean, if you look at economic history, rates have been far higher than this, and they surprise people over time. And like I said, I think a lot of the longer term trends have inflationary attributes to them. And so the other thing for your person on TV, credit spreads are low. So, you can have two things go against you, which is credit spreads gap out and rates are going up. And so we'll see how it plays out. So I don't want to guess how it plays out. I'm on the cautious side. I'm a little skeptical that we're going to have kind of just an ongoing soft landing here.
I'd be remiss not to ask you about the Fed. Given the higher yield environment, which you say it's not, but it is still higher than what it was before.
But it can go higher.
Will it go higher, and also will it force the Fed's hand?
Yes. I mean, there's always a notion that somehow the Fed is omnipotent and can do whatever it wants. And they do set short-term rates, but they also have to follow the facts. So they raise rates because inflation went up. And they can't control it. Even today, trillions of dollars of these bonds are sold every day. That's done by investors around the world. They cannot control all of that. Foreigners own $35 trillion of U.S. financial tradable assets. And so, they have to react to reality, which and that's not a criticism, and they say they're data dependent, but they have to wait and see exactly what happens and then do the appropriate thing.
But the thing is, their reality is different from the reality you have in mind. If you take a look at what Neil Kashkari said, he said the U.S. economy is on solid footing. And some other Fed officials have said that in terms of Fed policy, it is in a very sweet spot. So their reality is quite different.
I think, I don't agree we're in a sweet spot, okay? And I think you have to separate two things. The economy has been doing well. All the facts, we have effectively been in a soft landing. That does not tell you what the future is going to be.
That was the CEO of JP Morgan, obviously, Jamie Dimon, speaking with Bloomberg's Haslinda Amin in an exclusive interview. Now, over to Washington, where this morning the House passed a new version of President Trump's massive tax and spending bill. It includes a cap. It still includes a cap for state and local tax deductions. If you were waiting for that to sunset for the last 8 years, you will currently be disappointed. Joining us now is co-host of Balance of Power, Kayleigh Lines. So, Kayleigh, it looks like the SALT caucus I guess, capitulated is the right way to put it.
Well, they certainly agreed to vote for this package on the House floor, which, of course, passed very narrowly, 215 to 214 votes, so the tightest of margins. And they were able to secure a SALT cap that is 4 times what it is currently, which, of course, was $10,000. But, yes, they weren't able to get everything they want. Frankly, no one was able to do that, though compromises were made in order to make sure that this got across the floor, not only lifting the SALT cap to appease moderates in blue states, but also making some concessions to harder-line conservatives who are worried about the fiscal implications of this legislation, which is expected to raise the deficit by trillions of dollars. They were able to secure from the Speaker promises to bring forward work requirements, stricter work requirements for Medicaid to 2026 from 2029, also accelerate the pace of a rollback of clean energy subsidies from the Inflation Reduction Act. And President Trump is certainly happy about the end product here. He is praising it on True Social, but a word of warning to everyone here in Washington, on Wall Street and beyond, is that this thing is by no means done yet. And what just passed the House is very unlikely to be the final law, because it goes to the Senate next, and the Senate is very likely to change a lot of this legislation, including potentially the price tag of it, as the Senate would like to see many of the tax cuts made permanent rather than just for a short period of time when it comes to things like no tax on tips or overtime pay, which is only in this legislation expected to last 4 years. The Senate may want to extend that timeline, and they are not taking kindly, at least a lot of Republican senators even aren't taking kindly to some of these Medicaid restrictions that have been put into place, as well as the clean energy rollbacks I just mentioned. So the Senate is going to be the next big hurdle here, and they could send something very different back to the House, and it could be a lot harder to pass that changed version.
Yeah, fascinating. It looks like they're about $1 trillion and change apart. The Ways and Means Committee Chair Jason Smith telling reporters that they're at $5.25 trillion, while the House is under 4 when they're looking at those cuts here. Now, how do you think this is going to change in the Senate, and how will the House receive that?
Well, the price tag could be a big component of it, keeping in mind that the Senate is using a bit of a different mathematical calculation here as it considers the implications this legislation will have for the deficit, using what's called the current policy baseline, which essentially assumes because the 2017 tax cuts are current law, extending them won't be counted as deficit additive, even though that isn't actually the case if we look at the actual number of the U.S. debt deficit and how that is likely to change. But that's how they're looking at it mathematically, which gives them a little bit more wiggle room than the House had in terms of tax cut extensions. The other unique element to the U.S. Senate that is not present in the House is the Senate parliamentarian, which essentially is going to be what dictates whether or not all of this is actually fitting for budget reconciliation legislation, which by definition has to pertain to the budget and kind of the balance sheet of the United States, if you will, either be tax and revenue focused or spending focused. And there are some elements of this tax package that might not meet that threshold for approval from the parliamentarian. That could take some parts of this bill out of the picture. And then, of course, there's the Medicaid concern. Senator Josh Hawley, a Republican populist, has been very vocal about not wanting to see any cuts to Medicaid. He could cause some problems. There are senators from states that have benefited from an influx of money from the Inflation Reduction Act and those clean energy subsidies who do not want to see that unwound so quickly. And there's still some in the Senate, some fiscal hawks like Senator Ron Johnson, who think ultimately that spending cuts don't go deep enough and will be advocating for more of those. So there are many different ways in which we could see this thing change when the Senate returns in the first week of June.
All right, Kayleigh, thanks very much for your coverage. Kayleigh Lines is the co-anchor of Balance of Power out of Washington, D.C. You can watch that every day at 1 p.m. and then the late edition at 5. I want to make a clarification, by the way. Yesterday, I was speaking with Citadel's Angel Ubide, and I referred to him as an advisor to Spain's prime minister. I want to make clear that he's not a current advisor to Spain's prime minister. He's a former advisor to Sanchez, the prime minister of Spain. And I want to say that correctly because I want to have him come back on.
Yeah,
he was a great guest.
Sure will. And he can speak globally, and global markets right now are really where it's at.
All right. That's it. That's the end of the program, right? That's the end. This is the end. Okay. Yes. This is Bloomberg.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, OpenAI pays $6.5 billion in stock for Apple veteran Jony Ive's AI device maker. We discuss the impact.
Plus, OpenAI works to develop a major data center in the United Arab Emirates, a big overseas expansion of its Stargate effort to build out AI infrastructure.
Plus, AT&T agrees to buy the consumer fiber operations of Lumen Technologies. It's $5.75 billion. We'll discuss with the AT&T CEO. But amid a flurry of M&A news, Ed, we check in on the markets, which stabilized somewhat after yesterday's sell-off. The bond market dictating some slight risk-on assertiveness once again. NASDAQ up 0.4%. Big tech in charge of this relative rebound. But what's really rebounding, what's really excelling, is Bitcoin. At one point, eclipsing $111,000 per token, a new record high. Risk on there, but what are you looking at under the hood?
Well, I'm looking at NVIDIA for a curious reason. Later in the show, we're going to speak to the co-CEO of Kraken, the crypto exchange. Look at just before 10 a.m. Eastern time, the big jump in NVIDIA shares from flat to about 1.5%. Kraken's launching what it's calling X Stocks. It's a platform that will allow you to trade tech names like NVIDIA in the form of digital tokens. We will get into it later in the program. Apple is our big focus. The top story, yes, former and legendary Apple designer Jony Ive collaborating with OpenAI and OpenAI moving into the hardware space for AI, that hit Apple shares during Wednesday's session. And then our colleagues are writing about all of the attacks coming from President Trump to Apple. There is a lot with this name to discuss, Kara.
So much. And let's just dig into how OpenAI is planning that push into hardware, Ed. Joining up, as you say, with the legendary Apple device designer Jony Ive, the tie-up came with, well, a pretty hot promo video.
I have a growing sense that everything I've learned over the last 30 years has led me to this place and to this moment.
Ive, of course, a creative mind behind designs of the Mac, the iPod, the iPhone. OpenAI acquiring his device startup for nearly $6.5 billion in an all-stock deal. This could pair, of course, some frenemies with Apple, Ive's former employer, and an OpenAI partner. It's complex. We bring in Bloomberg Opinion's Dave Lee, who you have a bit of cynicism around whether or not OpenAI and Jony Ive can really take on Apple to bring us AI in a physical form. But what do you make of the promotional video? What do you make of the impact?
I mean, look, the video was incredible, wasn't it? The cafe they filmed it in belongs to Francis Ford Coppola, and I was saying to a colleague, it's almost like he directed it himself, right? It was so grand. Look, love Jony Ive. Yeah, I think he's obviously an incredibly gifted man. I think this is an incredibly difficult thing for even him to achieve, because creating the kind of hardware, which their stated aim really is to topple the iPhone as the leading device of choice when it comes to interacting with computing. I think that's incredibly difficult, and I think for all the experience and talent that Jony Ive has and the team that he's assembled, which Sam Altman called, I think, the most gifted, talented team ever assembled in history, which kind of gives you an idea of the hyperbole he's working with at the moment.
Marvel unite.
Yeah, precisely. I just think it's an incredibly tall order. I think it's easier for Apple to solve AI than it is for OpenAI to create the new iPhone, put it that way.
Okay, so Dave, let me go back to basics on the story. What the entity, OpenAI and I.O., is saying is that by the end of 2026, they'll have a range of devices, but we don't know what form factor, right? We don't know smartphone or, dare I say, chunky brooch a la Humane. I just want to get the basics of that out there. But to me, this seems like an acqui-hire, because what OpenAI is getting is not just Jony Ive, but a team of other former Apple designers. and who are, according to the press release, remaining independent.
Well, look, this is all about bringing in the expertise that OpenAI just doesn't have. I mean, of course, look, they've done incredibly well in creating a leading AI company, and it's seen as being ahead of the pack still. And ChatGPT has a huge market share in terms of people who are willing to go to a website to put an AI prompt in and get what they need. The problem is that over time, I think that way of interacting with AI gets a lot less useful, and I think we're seeing signs of that already. We've seen how Google are putting AI straight into their search engine in a big way, and that's a way to capitalize on a tool that people already use, and they find AI that way. OpenAI doesn't necessarily have that same vector. It doesn't have a device like Apple. It doesn't have sort of Amazon's reach with the cloud. It doesn't have a social network like Meta. It doesn't have a search engine like Google, and so they have to do something, right? They have to create something that's going to be the place that people interact with OpenAI specifically, and a piece of hardware is the way to do that. This is a very good, albeit expensive way to bring on that expertise, but then the complications will follow. I think next year's keynote, if they decide to present it in this way, of this new device, whatever it is, and there's been reporting this morning that it's perhaps like a third device in addition to your laptop and your phone, there'll be something else. I mean, that's going to be a very watched keynote. I think it's a big, big ask to expect people to add another device to their day, because we saw, like you mentioned, with some of those other wearables, that people from the word go just weren't very impressed. I think Johnny Ive is probably going to be a better judge of making something people like than those companies perhaps were, but I still think he's asking a lot of people to get on board with.
Johnny Ive was pretty critical of Humane and others having tried AI hardware.
Yes.
What's interesting, though, is Eddie Q, the Apple executive, was giving evidence at that Google legal fight, saying in 10 years' time we probably won't be using iPhones. We're going to discuss the Apple impact, but more broadly, do you think that this is a moment that we should be risk-off with Apple?
I think, the context of those comments from Eddie Q were in a competition hearing where it served the company very well for him to say there's a big threat against the iPhone. I do think what this is doing at the very least is highlighting the fact that Apple has been caught very much on the back foot. Since Johnny Ive left, I think it was almost 6 years ago, there hasn't been this sort of product visionary in the company. They haven't sort of hired behind him in a way that most people might have wanted. So I do think it sort of highlights that Apple has just huge amounts of work to do.
I want to go back to basics even further. Like, I think about how I use ChatGPT every day, and I use it through my iPhone, frankly, either voice mode or 4.0 text. How much of this story is about OpenAI thinking to itself that exact question? How are people going to use our software in the future?
Yeah, I think that's a big, big lingering concern, I think, for the entire company. Particularly as, as Caroline just mentioned, I mean, this was, Johnny Ive has been quite outspoken about what he sees as legacy devices of the iPhone and of Mac, just laptops in general, I guess you could say. I do wonder what this announcement might do for OpenAI's relationship with Apple, incidentally, because obviously you can use ChatGPT on the iPhone now as a sort of almost add-on service. I wonder if Apple might be thinking a bit more carefully about how they manage that relationship. But yeah, I just think this is about bringing ChatGPT into a everyday device in a way that's going to be much more integrated. Right now, as you say, people use the app, but I don't think this is going to be something that people go to an app specifically for. I think it's going to be a tool that's within a tool they're using for something else, and that's the big challenge they have.
Focusing on Apple, the point of your opinion piece this morning is that this is a bet by Ive and Altman that they might be able to kill the iPhone, and that's what drove the market in yesterday's session. Bloomberg Opinions, Dave Lee, thank you very much. Stick around for more OpenAI news as the company helps develop a major data center in the UAE. More on that later this hour with Chris Lane, Chief Global Affairs Officer at OpenAI. I want to talk more about Apple. President Trump has taken aim multiple times at the tech giant, most recently calling out a little problem with Tim Cook, asking the Apple CEO to stop building in India. For more on Apple's political concerns, Bloomberg's Ryan Vlastelica joins us. And, the point in your markets piece is that headlines are not going in Apple's favor right now, but the stock is underperforming as a consequence.
Yes, pretty dramatically underperforming, especially over the past month or so, where the NASDAQ 100 is up double digits, give or take, and Apple is, I think down a couple of percentage points. So certainly just a negative political backdrop for Apple. This is just sort of the latest example of this. Obviously, it's not as dramatic as we saw at the start of April when the tariffs were first announced and Apple saw really historic levels of volatility. Since then, of course, we have seen some positive signs like exemptions for smartphones and other electronic categories. And of course, we had the sort of the detente with China with respect to some of the tariff levels. But there's still, being in the attention like this is certainly a precarious position to be in, especially since people don't really see what Apple can do, especially in the short term, to sort of, assuage some of the administration's, stated complaints about its global manufacturing footprint.
Yeah. We're looking at a one-year chart of Apple right now. It has come up significantly from its lows. We sold off hard because of tariff anxiety. We're now up 17% from those lows, Ryan, as your story points out. But when you couple the ongoing worries of the Trump administration putting Apple and Tim Cook individually in the line of fire, at the same time as OpenAI seems to be coming for its lunch when it comes to hardware with AI, none of this speaks well. And you talk about how under-owned Apple is.
Yes, that was a Morgan Stanley study that was put out not too long ago looking at the first quarter. Portfolio managers are underweight on Apple relative to its position within major benchmarks, just a sign of the sort of like overall cautiousness towards the company right now. You mentioned the AI position. It is very unclear how well they are going to be competing in that realm. In addition, we have just sort of long-standing concerns about its valuation, about its overall levels of growth, especially if people aren't as eager to be buying iPhones, and of course, and you add on top of that the political backdrop with tariffs, with trade wars, and just sort of all this stuff putting together. It's certainly a lot of stuff for Apple investors to be considering, if they're looking at the stock right now.
Ryan Vlastelica, really well-read piece. Thank you so much. Now, coming up, AT&T CEO John Stankey is joining us next on the company's latest acquisition. It's all about Lumen. This is Bloomberg Technology.
AI is becoming mission critical for every enterprise on the planet in order to compete, transform, innovate. And the second kind of major trend is really about consumer. And wireless and fiber demand curves are converging. And you really need scale to compete in the fiber to the home business. So we looked at both of those trends and said we're going to double down where it makes the most amount of sense.
That was Kate Johnson, Lumen Technologies President and CEO, after AT&T agreed to buy its consumer fiber operations for $5.75 billion. Joining us now on Bloomberg to discuss all of the deal is AT&T CEO John Stankey. John, it is wonderful to have you joining us. And we heard from Kate, this converged customer that you've spoken to on your earnings. Is this the strategy behind beefing up when it comes to fiber?
Yeah, Carolyn, as we've talked about before, we believe there's going to be this demand for increased data consumption and workloads moving forward, especially upstream workloads. And there's no better technology out there for Americans than fiber. And we've got a big lead on how we're building fiber in the United States today, and this just accelerates it. And if you think about what we're doing here, we're effectively getting a little bit over a year's worth of build in this transaction. We managed to go into a footprint that, because there isn't scale right now in the Lumen operations, we can bring the AT&T scale behind it, drive penetration of customers, which drives revenues up. And most attractive to us is that these are markets where we're kind of under share in wireless business as well. And we know that when we put fiber in, we win, and we have a good success record of putting customers together. 40% of our AT&T fiber customers use our wireless service. So we're really anxious to get a chance to get into these markets and start driving some wireless growth that maybe we wouldn't have seen otherwise.
You bring customers together. John, you also bring infrastructure investment together. You have partnered before with BlackRock when it comes to reinvesting and accelerating the infrastructure build out. You're talking about bringing in another partner in terms of investing in this in the future. Have you had interest already?
Oh, sure. Look, we've been really successful with our Gigapower joint venture with BlackRock, and they've been a fantastic partner to work with. We're incredibly pleased with how that venture is maturing and where it's going. The right thing for us to do right now is to carry this through the regulatory process where we have control over doing that and ultimately get this transaction closed. But we're really excited to bring an equity partner in with us under a very similar construct to what we did with Gigapower. And I wouldn't be surprised if BlackRock might be interested in continuing in that relationship. And if not them, we know there's others who like these kind of infrastructure plays. And I think we're viewed as a pretty attractive partner, given our ability to build rapidly and what we've been able to show in terms of our market penetration and growth.
John, who would that equity partner be?
Well, it's to be determined. We'll ultimately close it first. That's our really important thing to do right now, is make sure we get all the regulatory approvals. And then, we'll do the right things with the various folks out there to make sure that anybody who has an interest has a chance to talk to us about it. And I would expect we've had a great relationship with BlackRock. And if it's something they're interested in moving forward with, I'd certainly like to move forward with them. But that doesn't foreclose another option if for some reason this isn't right for them in the timing.
John, this deal and a number of other things that you've done really intensifies competition in broadband, particularly for Comcast and Charter. Just thinking about our show, Bloomberg Technology, and all the people across America that watch it, why is that competition important?
Well, look, I think what's important is that Americans walk away with great infrastructure and that communities have world-class communications infrastructure that allows them to grow and have commerce and have jobs and people that want to locate to their areas. And the cities that we're going into and that we'll be picking up here have frankly been somewhat underinvested in fiber. And fiber's the best technology out there. It's better than anything that cable has on the market. And so our belief is that this is going to be great for those local communities, because not only are we buying these assets, but we're making a commitment to nearly double our fiber footprint by the time we get out of 2030. That means we're going to be investing and growing in Denver and in Seattle and Salt Lake City and in Phoenix, in Minneapolis, St. Paul, putting the best technology out there and employing local people who do the construction and hiring technicians that do the installation in houses. That's a great thing for communities, and it's a great thing for the United States, because you're going to get world-class fiber infrastructure that's built for the AI revolution, that's got symmetrical speeds down and out of the house. That's going to be good for everybody.
There seems to be M&A for everybody as well, John, when it's you partnering with Part, buying that part of Lumen, when we've just had Charter and Cox when it comes to broadband more broadly. Are you going to be more active in the M&A space, do you think?
Well, Carolyn, I said, I think even when we've spoken before, that my belief is that the communications industry is going to go through a layer of consolidation over the next decade. And I've been pretty clear that AT&T has a unique position. We start with a fantastic asset base as other companies are looking to bring capabilities together to meet the converged dynamic that customers want to buy from one company. And we have a lot of organic opportunities to invest in our business, and we talked about that in our December Analyst Day. What's unique about this transaction is it accelerates the footprint, and it's a make-buy decision that looks pretty straightforward. It looks like maybe in this case we should have bought instead of made. Look, if there's other options that come up that are similar in the economic dynamics where we can pick up footprint that accelerates us by a year or two, and we're buying it at a price that's similar to what we can go out and invest in organically, I wouldn't be closed-minded to that type of thing, but I'm not sure that there's going to be that many opportunities of scale to do that. In fact, this particular transaction is a bit unique given its size, the markets, and the footprint, and I don't expect that there's going to be a lot more behind it.
John, there had been reporting in April about a sort of lack of knowledge of the Trump administration's approach to, particularly in rural areas, broadband and fiber, and perhaps not releasing funds from the prior administration. What was your communication with the president and the administration about this, and how supportive are they of the kind of big picture that you outlined to me a moment ago of what you're trying to do for America?
Well, certainly the administration would like to see investment, and the entire tax plan that they're putting forward is stimulating that. And if we get what has been passed by the House last night or this morning, I absolutely believe we'll be taking some of that benefit on the tax side and increasing our pace of fiber investment in our business and in some of these markets I just talked about. Our communication has been, there's been a lot that's happened since BEAD was envisioned almost 4 years ago, and the legislation was put in place, and the legislation that said it should be a technology-neutral investment to build to these rural areas or places that aren't connected to the internet. And when you look at what the FCC said were the uncovered households last year, it was only about 7.5 million households. That's almost half as many households as when Congress passed the $46 billion for BEAD subsidy. The private industry, private markets, and whatever government funding has been out there has already solved half this problem. And so should we be taking a step back and thinking about how we're spending that money, and are we doing it the right way, where maybe we use satellite technology to get to very expensive locations instead of building fiber out there? I think that's the right thing for the American taxpayer, and I think the administration is doing the right thing to reconsider that.
John Stankey, AT&T CEO. It's been wonderful speaking to you on the deal. Really appreciate the time. Thank you very much indeed when it comes to all things M&A. We're going to take a quick check on the broader markets right now and all things partnerships and ability to trade names outside of the United States. We're going to be discussing how NVIDIA and Tesla shares popped today. This is as we understand news that, well, Bakkt Finance is going to be partnering with Kraken to enable you to trade these US names in a tokenized manner if you are based outside the United States. So if you are based in Europe and you want to be trading NVIDIA or Tesla stock throughout the night on a 24-hour basis, you can use a new tokenized basis for this particular stock. The person that's driving that is Kraken co-CEO, and we speak to him now with Shonali Basak standing by as well. Shonali, take it away.
Caroline, thank you so very much. And Arjun, it's good to have you. Of course, that is Arjun Sethi joining us, Kraken's co-CEO. This is big news in the world of tokenization. It's big news for Kraken. It's available to people who are outside of the United States. And my major question really is how soon this could be brought onshore in terms of approvals on a regulatory basis to get this done.
Hey, thanks for having me. I think the way to sort of think about it is that tokenized securities is the same way in which you should think about collateral. So collateral is the foundational trust layer, is the way in which we want to be able to help enable and enumerate this worldwide. And so while we're launching this with Bakkt and our other partners with Solana in Europe, in Latin America and Asia as sort of our first markets, we are going to work to bring this into the United States over a period of time. But I think what's more important is that you now, for the first time, have collateral that you can take with you 24/7. It's permissionless. You don't have to ask anyone for it, and it's not part of a walled garden. And I think that's the key aspect of what it means to be able to tokenize an asset.
One issue, though, Arjun, and you could see it coming from a mile away, is if you bring it to the United States, how do the traditional exchanges behave? This is not something that you can see the likes of a NASDAQ readily allowing or not pushing back against as you go to the SEC to get this done in a bigger way.
I think it's pretty natural for incumbents and what I'd call post-World War II brick-and-mortar companies to always push back against what they might have a monopoly upon. And what does that really mean? It's a walled garden. It's hard to innovate. It's hard to build on top of it. So when you think about global liquidity, global developers, global access to capital, global access to collateral, what do you want to build for and what do you want to build against? I think these types of products, it's not going to be just us, but anything that's happening in the crypto protocol ecosystem or decentralized, is that we're letting people get access to be able to innovate on behalf of U.S. customers in the long term, on behalf of European customers and rest of the world customers, is that you're able to finally, in one place, get access to global liquidity, right, access to more products, and not part of one, again, walled garden. So we're an exchange. Our whole goal is to be able to provide liquidity and to provide this innovation. But what you're now able to do is figure out ways in which the traditional industries, as you just mentioned, how can they be a part of the ecosystem rather than being sort of left out?
Well, they need regulatory clarity. Arjun, great to have you. Look, Superstate already acknowledged that they're doing this. They announced it earlier in the month. You're now doing it. But Larry Fink and Vlad Tenev at Robinhood, they want